Definitely some positive changes coming in from the bulls, with price now pushing up to $65,646, and we're seeing some major macro indicators flashing, which typically lead to pretty big moves within the market. So stay tuned till the very end of the show as we cover all of those things. We'll cover the macro, we'll cover the crypto, and I'll show you what this means for you and your portfolio going forward, because we're definitely seeing some positive price action. Smash the like button, hit the bell notification, and subscribe to the channel, and let's get straight into the show content of the day, where I did want to start off over here, of course, with Bitcoin in terms of the timing cycle. Now, some very, very positive signs that we're seeing. It's looking more than likely that we're going to be reaching the end of this corrective phase, having been 125 days into this correction. This is the fifth major correction that we've seen within the cycle. There you can see within this bull run, if you consider the start of the bull run, the exact bottom of the market cycle, there we've been through 1, 2, 3, 4, and this being the fifth and longest correction at 125 days with 27.65% drawdown. So with that being said, if that is to be the case, well, the monthly candle is shaping up to be very, very bullish, and you can't be bearish when you're seeing a candle like this, especially if we close this candle as a green candle in the next 14 days. That's going to look very, very strong for continuation higher. It's not the only positive sign that we're seeing, though. We're seeing some macro indicators which are showing telling signs for what may be to come. So stay until the end of the show. I may even have some live trades to give you in today's show, some coins that are lining up in the perfect zones. Also, let me know in the comment section if there's something specific that you're looking at that you think is noteworthy to bring up for the rest of the audience. And then let's continue on over here. So Banter bubbles on the hourly, a lot of the coins pushing up over here. Look at the daily. Most of the coins still holding up the gains on the daily. Yesterday we had fulfilled the wick towards the downside, creating a little bit of a trap scenario where a lot of people sold out of positions, only for that to be reclaimed weekly, looking strong. And even a lot of the coins clutching back on their monthly gains over there. So some of the notable changes that we've seen within the market from a macro perspective is this, right? One of the things that we're looking at is the breakdown of the DXY, that being the dollar index. Now, we know if the DXY can actually break below this major support, which is going to be the grayed out area, then you would see a bigger breakdown, because this is ultimately still a high time frame range, high level that we need to lose. If you lose this and you start to break towards the downside, meeting up with the bottom of this parallel channel, well, that's probably where you're going to see your biggest and greatest bull rallies down here into that zone over there, at least for crypto. Not only that, but you have gold breaking out to new all-time highs. Very, very, very powerful moves over here on gold, and crypto tends to move alongside gold and the stock market, so slightly lagging that currently, but nevertheless, there it is. Gold looking very, very strong, and you have your clear invalidation levels below over there. Not only that, but now the market is officially pricing in that there's going to be, the base case at least being 6 interest rate cuts over the course of the next year. And we would know that that means that the market will have a much easier time running, because when interest rates have been cut and come down lower, people are more likely to spend money and take out credit, right? Which they tend to use into risk on assets as well. Not only that, but we're seeing this tweet over here from Seth Golden. He says, good luck getting a meaningful market correction when the forward next 12 months EPS is trending meaningfully higher over here ahead of the earnings season. And then he says, what's that green number going to look like after the earnings season when all the earnings come out positive? It means obviously it's going to be continuation higher. And here we've had the stock market. It came off of the TD sequential 9 signal, which we said would lead to a 1 to 4 week correction, which could be sideways correction, right? It could just be a consolidation. And so far it is looking like a consolidation. That allowed for a little bit of a rotation from the S&P 500 on the top left and the NASDAQ on the top right to rotate into the Dow Jones Industrial Average, which is now breaking out also to new all-time highs. Very, very bullish, breaking out of a long-term rectangle consolidative environment, and that leads to the big moves. Coinbase has been following along and slightly lagging what the Dow Jones is doing. So if Coinbase is to break out next, well, that means that the overall crypto market is probably going to be pretty bullish, and you are going to see continuation higher. And as mentioned, when you see a monthly candle like that, it's just very, very hard to be bearish, right? Despite coming into major resistance, which we're going to be outlining right now. That's kind of the last line that the bears have as their defense. If bulls break through that, then of course it's going to be onwards and upwards, and we are going to be looking at major continuation higher. Now, one of the big signals that we're seeing is a massive inflow over here in liquidity from the People's Bank of China. If you look at this histogram over here, look at that notable change compared to what we've seen in the past. Some major upticks over here in the liquidity. You have the USD stablecoin supply also still increasing towards the upside. High highs and high lows, that is green and continuing up, and net USD liquidity. And then if you look at all the other major central banks over here, also increasing in liquidity. And the People's Bank of China tends to follow this cyclical 12-month path. Now, if you look at this, here's the 12-month cyclical path. You can see the injection has led to a major marked uptick. Now, the cyclical path works kind of like your stochastic RSI or any of your momentum oscillators, where it ranges from periods of very, very low volatility to increasing towards the upside, and then it tends to roll over. Now, this has been front run ever so slightly, so it has come as quite a big surprise. The stimulus from China jumped more than 100 billion, and that was in the form of reverse repo injections that came into the market. And now it's the highest level that we've seen since February in 2024, and taking place very, very early within that cycle, which could provide some much found liquidity into the markets. And also keep in mind that China tends to go through these cyclical paths as well of banning and unbanning crypto. So it's one to keep an eye on, as they're more than likely going to unban crypto as well in the near future. So here you have the People's Bank of China, or at least the Shanghai stock market, at least the Chinese stock market, increasing towards the upside over there. So we'll keep an eye out on that as well. By the way, if you do want to trade any of these crypto stocks, forex pairs, or commodities, all in one easy to use place. So if you want to go, for example, long on gold over here, if you want to long gold, if you want to short the DXY, if you want to trade any of those, this is all listed. There you have it. Here you have gold. Here you have German top 30 stocks over there. You have the Euro 50, the Dow Jones. You have crude. You have copper, Brent crude oil, aluminium, Australian top 200 stocks over there, natural gas, nickel, silver, the S&P 500, the Spain stock market, the UK top 100, zinc. You have all of this, plus crypto pairs on Prime XBT. They are one of our exchange partners. They've been supporting us for a very long time. Never, ever, ever had an issue with them. If you are looking for a new exchange to trade on with commodity stocks and forex pairs, use the sign-up bonus, right? This is specific to my audience. They've created this special code just for me to give back to you guys, so you can claim up to $7,000 sign-up bonus. But I know a lot of you won't qualify for that because it's dependent on how much you deposit. So what's more important to me for you guys to save is having the 25% discount, 25% off all trading fees, right? That makes a huge, huge, huge difference over time. There's a link below. Go through to the link over here. You'll see Prime XBT. Click that link and make sure that you do sign up over there. Now, some overhang supply that's still in the market, of course, being Mt. Gox. We've got rid of all the German selling, has been completely absorbed by the ETFs over here. But if you look at Locke Davis, Mt. Gox moved 95,870 Bitcoin. That's $6 billion worth. And he says the final FUD is here. Do not panic. Now, what would that mean if those coins hit the market? Well, this. If you look over here at 𝗥𝗚𝗚𝗏, you got to love the Twitter names or the X names over here. He says, Gox sent out 90,000 BTC, 65,000 returned to individual creditors, which is about 20 to 25% of all the BTC is going to individual creditors, and will likely be sold, but over time, which means this, right? 13 to 16,000 Bitcoin selling pressure versus Germany's 50,000 selling pressure. Now, I don't need to tell you what happened to the 50,000 Bitcoin that Germany sold into the market. Bitcoin dipped down to $53,000, and now we're trading back up at 65,000, with the ETFs absorbing the majority of that very, very easily. So selling spread out to 200 to 300 BTC per day on average versus Germany's 7 to 10,000 BTC per day is likely just a tiny little blip, right? A tiny drop in the ocean in comparison to what happened with Germany. And even that, Germany couldn't break Bitcoin down below $53,000. So this is what it looks like when you look at the spot ETF total cumulative flows in dollar terms, and you look at it on a chart. It's just been cumulatively increasing towards the upside with massive amounts of institutional buying. Here's another viewpoint with the histogram over here with yesterday's ETF inflows, also very, very positive over there. So looking overall really good. And you can see over here, same thing. If you look at the institutions funding the crypto market over here, depositing into various different exchanges to buy absolutely enormous amounts of crypto, you can see that live and on chain. With that being said, we've outlined the risk towards the downside and the overhead resistance levels at play. And we've said that give or take, bulls need to get price about another 10% up for you to be fully safe on the long trades. Otherwise, it does theoretically make sense to take hedge short positions at current levels, and I'll show you exactly why. But I want to encourage you to not be too bearish at this point in the market cycle, simply for the fact when you look at what's happened previously, post-halving, when Bitcoin consolidates near its previous cycle all-time highs, this is usually when you get the very parabolic phases. Now, you can look over here. What happened, the first halving cycle that we ever had was on the 28th of November, 2020, or 2012. Bitcoin consolidated near its previous all-time high for only 1 month and pretty much broke straight through and ripped towards the upside. You got a big parabolic move, right? Now, if you look at the second halving cycle, that happened on the 9th of July, 2016. Bitcoin then consolidated, or at least grinded its way onwards and upwards into those all-time highs. We consolidated for 3 months at that period post-halving cycle, and look at what happened next. Pretty parabolic move towards the upside. Now, if we go to the next one, this was the third halving cycle that we had on the 11th of May, 2020. I'm going to show you another chart to showcase as to why, in terms of the summer periods, we're in a very, very similar position to this part of the cycle. We only consolidated for 1 month over there, paused on the second month, and led into a parabolic advancement. Point being is, coming after the halving cycles is usually when you're going to see those biggest moves. That is the bull market that everybody knows and talks about and wishes for with the alt season, where everyone says alt season, when's alt season? This is what they're looking at. They're waiting for this phase of the market cycle. Now, if we fast forward to where we are now, remember, the longer term, the bigger the consolidation is, the bigger the next breakout will be. Now, this is the first time we ever went on to make new all-time highs before the halving cycle took place, which was on the 20th of April this year, 2024. We consolidated at those all-time highs now for 1, 2, 3, 4, and now this being the 5th month. Once you break above that, expect a very, very, very explosive move towards the upside, because again, the longer the consolidation, the bigger the breakout, consolidation or reaccumulation, whatever it is that you want to talk about over there, the bigger the breakout that will take place. So encouraging you not to get too bearish on the longer term over here, or the medium time frame. There is still resistance and downside risk, in the sense that you've created new swing lows, you've created lower lows and lower highs on the Bitcoin chart. Anyone can see that, right? You don't have to be a genius to identify that, but you need to time it over here. You need to look at what's happening within the timing cycle. This would tell you that for the next 6, 12, possibly even 18 months, you're going to have bullish continuation for Bitcoin, and you should more be positioning your mindset to a buy the dip scenario, right? So right now, as it currently stands, there's nothing bearish about Bitcoin as long as you remain above $60,000. $60,000 is the range low, which we reclaimed. It also happens to line up with the 21 exponential moving average. Now, you do have the lucid SARs, which are coming down. That is a stop and reversal indicator, which often acts as resistance. You can see once broken, you came back over here to test it. You wicked directly into that with an immediate rejection towards the downside. Now, I am inclined to believe that it's more likely than not that, given the current momentum of the market, you're probably going to breach this level. Once you do breach this level and you can break the downsloping trend line over here, it's all systems go for long and strong. So again, to outline what your risk is for waiting, well, if you simply just wait to get bullish, you only have to wait for 6% higher. Give it 7% higher for the bulls. If they can close price action 7% higher, there's zero bearish indicators left, and it's full-blown bull, right? So keep a close, keen eye out on that. It is important to be looking at. Right now, we're pushing into the middle of the Bollinger Band, which is temporary resistance. So we are coming into resistance level. I'm going to show you on the lower time frame as well how that lines up. What that means for you at home is please do not have FOMO and chase price. There is going to be a pullback at some point, and that's going to be your safer entry to look for the next macro high low, which I'll also show you on another chart that's going to be coming up. Over here, volatility is recontracting in over here, which supports what I just told you. The longer the consolidation or the range that forms over here, like I showed you on the monthly time frame, 4 months of a ranging market at all-time highs, the longer that happens for, the lower the volatility, which means the bigger the expansion when you eventually break out of that area. So something noteworthy and important to look at. This was something we outlined over a week ago, where we said watch for the potential head and shoulders formation which could be forming. So far it is holding up to be pretty substantial over here, with price now breaking above all the moving averages, the 3, the 9, and the 30 on the 5-day time frame, which is a good sign. Now, this has been our Wyckoff accumulation schematic, which we also planned for over here, looking at the spring phase, which we've clearly got. Remember, spring phases, spring, right? They go very, very quickly like a spring. They move aggressively towards the upside, and that's exactly what we've seen. So it matches the Wyckoff accumulation schematic description of what you would expect to occur at that spring phase. Now we're just waiting for the back test into the range low, which was prior resistance, flipped into support. Now, I'm not even convinced that you're going to get a move down on the next pullback as low as $58,000 to $60,000, which we outlined yesterday, but I'm more interested in somewhere around 62,000. Now, remember, those numbers can change depending on when price starts to pull back. I'll show you why I'm looking at those levels, but one reason why is going to be the 9 and the 18 exponential moving average, which are now officially crossing back towards the upside. Any pullbacks that come back into those EMAs, that's going to be a level where you want to start to look to get long, which is lining up at your pivot level at $61,000. That's allowing your RSI to continue to trend towards the upside. You're coming into the mid-range level. Here's your mid-range. There it is. This is your mid-range level right now, based on the prior trading range that price was caught in with those horizontals. So you're finding a little bit of resistance over there, but given the momentum and power of this move, very, very possible that you're going to smash through. So I'm prepping to get ready to take some trades again. As mentioned, I'll let you know in today's show, there might be some actual trades that I'm looking at. I've got a list over here of coins that I've written down. I have Rune, Doge, Chronos, Arweave. I'm going to update you on the long. Ondo, I'll update you on the long. I've got Optimism, Arbitrum. I've got the Sui long, which I'll update you on, which we already took. I got 𝗏𝗡. I got the Link long. I'll update you on. I got 𝗕𝗫𝗓. I got the Bonk long, which we've already taken, and I'll update you on. I've got 𝗬𝗏 and then the ETH long as well, which I can update you on. So those are some of the positions that we're looking at, which you can look forward to in today's show. Guys, smash the like button. Let's see how many likes do we have over here on today's show. There's almost 2,000 of you live. Please do me a favor, smash the like button on the top over here. It really, really helps to get the algorithm happy and the content out there. All right. Also to mention the Cybertruck competition. Now, some of you told me you already have a Cybertruck, so you don't want a second Cybertruck. Well, if you don't want the Cybertruck and you prefer to buy a Lambo or something, remember that you can, of course, take the cash prize, the equivalent cash prize of what the Cybertruck costs. So if you do want to participate this, maybe in a country where you don't have electricity, aka South Africa, then you might not be able to charge your Cybertruck, so you probably want something diesel or petrol. Well, again, you can just take the cash and you can use that towards anything of your choice. But for the rest of you who want the actual Cybertruck, well, go to the link in the description below of the YouTube. Sign up to Bybit. Remember, this is a P&L percentage-based competition, which I believe actually begins today. So the highest P&L percentage will win a Cybertruck. Everything is described below over here in terms of the T's and C's, terms and conditions. Go and have a look over there and participate in the Cybertruck competition. All right, continuing on. Seasonality and summers. This is quite a long thread, so I'm not going to go through everything over here, but I'll read a little bit over here. So it talks a lot about the BTC miners, which we spoke about over here, was the one reason that we're looking for a short position is there was the miner capitulation signal that was taking place over here. So if you look over here, point number 1, small BTC miners shut down and sell due to reduced profitability as rewards halve when the halving cycle takes place. Number 2, electricity costs rise with higher temperatures going into the northern hemisphere summer. And number 3, this year, some BTC miners are dedicating more efforts and time to AI computing. So why is it that we are likely not to follow the summer lulls that we've seen within the previous cycle? So if you look over here, 2019 summer was down, right? If you look over here, again, came down over here into summer. Why are we more likely in this 2020 summer, which he says over here, where price pretty much goes vertical, and not in the 2022 summer? Well, it's very, very simple. We do have, of course, a lot of different things going on within the market. I showed you all the different liquidity that's coming in the DXY breaking down. We got the timing cycle, which lines up, which shows that we've already come towards the end of the bear market. These are summers within bear market territory. Summers post-halving coming into bull market territory are more than likely here prior to a parabolic advancement. So as you leave that summer period is usually where things go full vertical, and you can see we're not that far out from leaving the 2024 summer, which means that all dips are buying opportunities for the next couple of months. In the lower time frames, you do have on the 12-hour chart a little bit of overhead liquidity coming in over here at 66,490. That is going to be 16.82 million. I also wanted to outline on the 3-day time frame what the liquidity looks like over here, because this still could create the case for one more spike up in a rejection. And then if you take that 12-hour liquidity on the top side first and you reject, well, $62,000. Remember, I showed you $62,000 right now as a key area of interest based on the 9 and 18 EMA, which is crossing towards the upside. It's also the 250 EMA, which will inevitably be crossing on the 4-hour time frame. And I'll show you that in a bit. That tends to act like a magnet. So one thing that I'm reserving the possibility for is a spike up for that 12-hour liquidity, then rejecting and coming back down, possibly down to the $62,000 zone. That is going to be the buy the dip opportunity. So lining up with that key liquidity on the 12-hour time frame, you can see you have the 0.786 fib retracement level taken from the highs over here down to the lows, and that's coming in at $68,000, right? So I am watching for weakness. There is not an active short trade in the making here based on the monthly time frame and what we've seen, as well as based on how the last 2 days candles have formed, right? Look at this massive candle towards the upside. Look at the wick that came down, shaking the bulls out again, flipping them bearish and immediately getting absorbed back towards the upside. That creates a shakeout scenario, which will create a lot of FOMO in the market, where you might see people chasing price action onwards and upwards. So theoretically, if you have your stops below yesterday's low, I would say that's a valid place to stop out of any long trades that you're on. And that doesn't matter which coin you're looking at, whether it's Bitcoin or any of the altcoins, it's all going to be the same thing. But if we do see that liquidity taken and we see signs of weakness coming into this region over here, that is a prime zone to at least hedge some of your bets with a little bit of a short trade. Now, do I think that price is going to play out all the way down to $40,000 over here or $45,000? I think it's incredibly unlikely given the monthly candle and the way the monthly candle is currently forming. I think what's more likely is that you'll probably see the move back down to about $62,000, stopping out these guys over here. So if you do have all the people's sensible stop losses being placed underneath that low, that becomes that liquidity ripe for the taking, which I just showed you, right? If you look over here, why is that there? Well, that's exactly why. 62,163, they're all placing their stop loss underneath yesterday's wick and they're going giga long. So watch for weakness. This still will give you a valid trade as long as you can time where you're placing your stop loss and you're getting the entry nice and tight. You could still get a nice little hedge short trade with about a 3-to-1 risk to reward ratio. Then the next dip that comes down into this region over here, back testing the prior range low, which you can see over here. Here is your prior range low. Flipping that into support, backtest into that as per the Wyckoff accumulation schematic, which we showcase on this chart over here, become a buy the dip opportunity. There we go. Spring pushes back up, throws back into that support level, and then you have continuation higher. So that's one thing that I'm looking at. That's one thing I'm waiting for. We can also use over here the CVD spot as well as the futures and timing it with the open interest to look for signs of weakness. As it currently stands, this continues to remain a spot-driven bid, right? So the spot buyers are stepping up and aggressively buying into the market. We've seen that in the form of the ETF flows, and consequently, leverage are chasing. all the shorts that are trying to step in front of the freight train are getting squeezed out, and that's adding additional fuel to get prices higher, because when you get stopped out of a short position in a trending up move, what happens is you're forced to market buy. The form of a stop loss being triggered on a short trade means they immediately close and market buy to revert that trade. And that's causing a little bit of a squeeze in the market. So we've been outlining the levels for the whale room community on the 15-minute and 1-hour time frame, just showcasing where your invalidations would be. This would be the invalidation of this training move. If you do start to break below the $63,000, well, then you're going to, of course, go deeper down into the 62,000 zone, which becomes the buy the dip opportunity. Anywhere between 60 and 62 becomes the area of interest. Now, if we go into the 4-hour time frame, this is what I wanted to show you, and just encourage those of you who are experiencing extreme FOMO with the market running away because you're not in any positions. What typically happens is the 50 EMA will cross the 200. Price may be overextended from that level, might do something like this. But following that overextended move, this often acts like a magnet where it sucks price back into that cross and back tests it as support. Again, where does that line up? Right now, that would be rising. So it would be around $62,000. All in alignment with what I just showcased to you in terms of the liquidity down here, as well as if we go into this time frame chart over here, the 9 and the 18 exponential moving average. So 9, 18 EMA, you have the liquidity in the form of stop losses. And on top of that, you have the 50 and 200 EMA moving towards the upside and about to cross. And you feel free to go back and back test every time one of these things have happened. When you've got those crosses, you almost always get a pullback into that region. So ETH is looking strong over here. You could make the argument for ETH that you could theoretically be long on ETH with stop losses below yesterday's low. That's just in case of a runaway move. For those of you who have no positions on the table, in the event of a runaway move like that, well, stop loss would be below here. You can still participate in that upside move. Okay, BTC is definitely taking the reins over here because you continue to see the downtrending move in ETH BTC. I saw Justin Sun increase. That's your excellency, the founder of Tron or TRX. He increased his ETH position drastically. He's now got, I think, a $285 million ETH long position. So something to watch for over here. If you do start to get moving on this, it's probably going to move very, very quickly towards the upside. And we are of the opinion, following the backtest into the fair value gap over here, that this is a reaccumulation phase on ETH BTC, and we're going to be looking for higher prices. We'd also like to see Total 3 increase new money coming into the market, break this downsloping trend line, get back into the yellow zone. Right now, we came down into the discount zone. Remember, we labeled this into the discount and the premium zone, and we told you that you ultimately want to buy into the discount zone and you want to look to take profit in the premium zone. The only reason you wouldn't take profit in the premium zone is because you're consolidating or grinding into the top of that premium zone. That tends to lead to big breakouts. So again, get ready. There are a lot of trade opportunities. We'll start going through the list. Get your Bybit account ready as well. Participate in the Cybertruck competition. Click register now, and you will immediately be entered into that competition. Let's see, I should probably register as well. There we go. Registration successful. Invite a friend. You guys can invite your own friends. Okay, let's continue. Let's continue on over here. I want to have a look at some of the altcoins, and then we'll see if there's any trades to be taken. So first, I'm going to update you on some of the long trades that have previously been given. And then we can go through some of the other potential trades that might be ready for action right now. So the first one that we gave on the show was Arweave, right? Okay, if you are in the Arweave trade, yesterday we spoke about taking a little bit of profit coming into the resistance, leaving the rest on the table. If you are in that trade, continue to hold that position. It is looking really, really good. Had you taken that with us on the show over here, you would be up now 41%. Wow, on Arweave, a 41% move over there. Looking really, really good. Next up, we have the Ondo long as well. Let's go to Ondo over here. Ondo was another trade that we took. There it is. Okay, Ondo long also looking really, really good. I would probably eliminate the risk over here. So move stops into break even. You can't lose money. I wouldn't take any profit on this trade yet based on what the rest of the market is doing. You're likely to see continuation in the expansion from this point. If you really want to bank some profit, I would probably just say raise your stop below yesterday's candle low. That is going to be on Ondo, and you're likely to see continuation higher. Next trade that I gave you guys was SUI. The SUI long. Here it is. Here's your SUI long. You've broken the downsloping trend line. This trade is going along swimmingly. Very, very good over here. Very, very swimmingly good trade over there. 35% up. Guys, if you took this trade, give yourselves a round of applause and also smash the like button, right? Smash the like button. It really helps to get that show content out there. So you're still looking for a little bit more upside over here. You got 45% on Arweave, 35% on SUI, and you could still get another 20% pushing up into the range high over there. That is the SUI trade. Next up, we have the Link long. We also gave a long on Chainlink. Here's your Chainlink long. Had you taken this trade, where would you be? You'd be up now 15%. Of course, you can totally eliminate the risk. You've got absolutely no chance of losing on this trade. You are coming into resistance, but I'd say the same thing as Ondo. Based on the momentum of what we're seeing within this market, you don't want to necessarily even TP half over here because it's likely to consolidate and continue to expand onwards and upwards. Continue to hold this position. If you want to bank some profits, I would say underneath Monday's lows, where you would take a little bit of profit if price started to come back down. Next trade that we gave was the bonk long. We've already eliminated the risk on the bonk long, but let's see where we are at on that particular trade. Let's see over here, bonk. Okay, so bonk, had you taken this trade with us as well off of the key support over here with the upsloping trend line, you can see the diagonal upsloping trend line, you'd be up almost 50% over here. I would continue to just hold this trade. You can TP probably half over here because the meme coins are volatile, and if you get one little bit of a cough or sneeze from Bitcoin, this is probably going to come down aggressively. So that one I'd maybe take some off the table. All right. Now, what about the other trades? What are some of the new trades that we're looking at? This is simply to give you an outline of some trade ideas. It's up to you whether you want to take the trade or not. But the first one that I have on my list is one that you guys request a massive amount of times, and it's Rune, right? Rune came down to our key level of interest. I would consider that close enough. And theoretically, I would say that you could probably take the long with the stop below yesterday's candle low. So if you go over here and you look for Rune, let's have a look. Let's take the Rune trade. I think Rune will go over there. All right, let's move on to the daily time frame. So this is one of the trades that we can look at over here. Stop would just go below yesterday's low. So that's the Rune trade. I'm going to take a trade on Rune over here at 4254. I'm going to put 10% of my equity in, running 5x leverage. I'm happy with that. That's fine. And I'm not overthinking this, by the way. Let's see. Stop loss goes below yesterday's low. I'm actually going to go below Monday's low, 3.78. That's it. 10% on my position. Stop loss at, there we go, 3.78. That's area of interest. Okay, cool. I'll be scaling in this position if it does come any lower, but I'm giving it a chance to start to break out from here. So that is the Rune trade. Let's go. Where's Rune? There we go. Rune trade. This is going to be a break of structure once you get above here. I like this candle that came down, back tested. Remember, this was the deviation level. Here you have it. Look at this. There we go. Down sloping trend line, hits the range low, breaks back above. I wanted the yellow to get hit, which would be a 50% wick fill. Missed it by 1%. It's close enough. You don't always get the 50%. Call it 40%. It is what it is. We're in the Rune trade. There it is. We're looking for expansion from this point onwards. Okay, that's one. Let's give you another one. Dogecoin. Okay, Dogecoin is another one that I'm looking at over here. So let's go to Dogecoin. There we have it. Okay, also breaking the downsloping trend line, similar to what Rune's done following the range low. You can see a beautiful wick that came down yesterday over there. That opens up a relatively decent trade. Now, I don't love this one because I don't love Dogecoin, but I'm anyway going to take a bit of a trade there. So let's go to Dogecoin. I'll just make it a smaller trade. So we'll go also onto the daily time frame. There it is. Okay, Dogecoin, we're going to take half of this. So that is, let's go with 100,000 Doge. Is that correct? Wait, let's just quickly see that again. This is a $4,000 position. I need to round about half that. There we go. So I'll go 140,000 Doge and we'll hit that in. Perfect. Okay, so we're in Doge. Let's add the stop loss in as well. Let's just get the exact level. I'm going to also leave a little bit of a wide stop for today. You could stop below that wick, but I'm going to leave it at about 11,412. 11,412. So here we have it. 0.11412. I'm going to put that in over there. Okay, nice. Next. Okay, what else do I have? Chronos. Let's go to Chronos. Remember, guys, I'm not a financial advisor. This is not financial advice. Take the trades at your own risk. Okay, so look, there's not that much of a narrative behind exchange coins, but downtrending for a long time, hit the key level, started to bounce out from here. It's not bad. It's up to you if you want to take this. There we have it. Same thing. What I like about this is yesterday's candle flushed completely below that candle, which would be viewed as a major shakeout in the market, immediately came back up. So you could probably put a stop loss below there. And of course, if you go back down below there, you're completely wrong on the idea, and then you need to get out of the position. I don't love it. I'm not going to take that one. Okay, what else do we have? Optimism and Arbitrum. So here we have it. Let's go to Optimism. Up to you if you want to take this trade. Optimism already starting to break structure, creating a higher high for the first time. Will you get a higher low? Well, that's questionable based on what we're seeing across the board on yesterday's candle. You have the downsloping trend line. Theoretically, you could start to open up longs over there. I don't love that trade. I prefer this one over here, which is going to be Arbitrum. Downsloping trend line hasn't deviated the range yet. So coming into this zone over here, I'm looking for price to start to pick up. So I would take an Arbitrum long, right? I would definitely take an Arbitrum long over here. And let's just double check this Dogecoin. So guys, be careful. This has happened to me many times before, because especially when I do it quick like this. Look at that. I'm on 75x long. Remember, the exchange is a casino and they automatically reset things. So we got to go back to Doge over here and change this back down. On a meme coin, it goes low as 3x. Just change that back to 3. Let's just try that again. Okay. I'm going to have to do this just now. That is really frustrating. Let me just refresh over here. So you got to be careful. Just do all your double and triple checks over there. Luckily, I saw that. Okay, I'll change it after the show. I'm going to have to probably close the position and reopen, which is frustrating. Okay, next. Let's move on. So Arbitrum. Let's go to Arbitrum. And I'll do that one in a little bit. That's also why I'm using isolated in case you make mistakes. Cross margin will risk all your other accounts if you make a mistake. So it's already on 3x. Perfect. Same thing. I'm going to go with about half the size. So 8. Okay. Arbitrum. That's it. 7164. Okay, there we go. Remember, calculate your own risk on your trades. This is not my entire net worth or portfolio, guys. This is just one of my portfolios or one of my accounts. So you need to calculate your own risk. Don't do what I'm doing where you're just hitting in 10%, 5%, 20%. I know what $50,000 equals in terms of my overall crypto portfolio. So I already know what risk I'm taking if I even enter in this entire $50,000 and I lose all 50K. I know exactly what I'm doing. Please calculate your own risk, right? Okay, next. Another one that didn't look too bad that I found was Matic. Okay, here's Matic starting to break back into the range over there. It does have to contend with this resistance coming in, but if we do start to see a breakout in the overall market, well, of course, you would have your long over here, stop loss below. Let's just quickly see percentage-wise, how far away is that? Sandeep's coin, will Sandeep do anything? 7% away. I don't love it. Next, let's move on. 𝗕𝗓𝗓. 𝗕𝗓𝗓 is coming off a strong downtrend, but nevertheless, it is at a key level, right? There you go. Coming off a very, very powerful downtrend into key support. I'm going to give this one a little bit of time. 𝗕𝗬𝗕𝗏 is the other one that we're looking at. Now, when this one gets moving, it really gets moving. So let's have a look at 𝗕𝗬𝗕. There we have it. 𝗕𝗬𝗕. Okay. I mean, I would really love to get it on a pullback like this. But again, based on the way that the market's moving, I'm not convinced that you'll get it. Let's just see over here. Percentage drawdown from there to there. 14%. It's a bit much for me. I'm going to wait. And okay, I think, let's see, we'll take some requests as well. And I'll show you a couple more. Start dropping your requests if you see anything that's worth looking at. While we wait as well, I do want to let you know that I will be taking my first trades on the BitFunded account today. So when I actually signed up, you go through here. If you do want to participate, BitFunded is where you get funding. So if you have a smaller account, or even if you have a big account, but you don't want to risk too much money, you can use your, let's say I saw even as low as $50. I'm going to show you in a moment, but you go through to the link in the description below, go through to BitFunded. You have to click that link, then sign up, right? When you sign up, you're going to follow these prompts. Click register. As soon as you've clicked register, just close that. Close it completely, right? Then you're going to go back here. You're going to go to this over here. You're going to click BitFunded-Kyle. That will take you through to the funding page, which looks like this. Now that I've done it and I've actually gone through, you have an option for only $49. So you can take very, very minimal risk. I'm going to start with this. With $49, you go buy now. Okay, so if you pass the challenge, you will receive $5,000 to trade with. Now, you can trade. By the way, for those of you who are going to message me now that I'm doxed, any of you can look me up on LinkedIn. Feel free. I'm not worried about being doxed. Honestly, I was doxed long ago. So, and I'm moving to Dubai, so I won't be living here anymore either. So you guys don't message me about that. All right. You can use crypto, right? You can use crypto over here. Place order. Okay. It will take you through to another page over here. And if you want to participate with crypto, well, you can pay obviously using Tron or whatever it is. You pay the $49. You have 30 minutes. And I'm going to do this after the show. I'll let you guys know how it goes. If you want to do it with me, the links are in the description below. All right. A big reminder. I wanted to remind you guys, for anyone that is holding, it says over here, for all astronauts on neutron.org who are yet to have to migrate to their former pools. If you are somebody that's holding Astro, this is for you. Please remember to migrate, right? Please remember to migrate. Otherwise, you lose all of your coins. Quick reminder for you guys. Also, Donald Trump has now said he's going to release a 4th collection of his NFTs, right? He mentioned that. I don't know what it's going to be called, but he mentioned that he's releasing the 4th one. You guys know, since the very first one, which was in December 2 years ago, I've been actively telling you to buy those NFTs. I think that it's the best bet when it comes to NFTs. We always knew it was going to make a lot of noise going into elections, but little did we know there would be an attempted assassination. I think that makes their value go up even higher. I bought 2 of the big packs from the presidential campaign selection, or at least from that series of NFTs. Which means I actually also got a physical card with a piece of his suit. I really think if you are going to place a bet on the NFTs, keep an eye out on these. You don't have to buy the whole collection like I did. You can just buy one. Okay, they're usually valued at about $100. Casper, BTC approaching that support level over there as well. Okay, we can have a look at a couple more. Let's see over here. Guys, please smash the like button. It helps to get the show content out there. Let's quickly see. Let's refresh over here. How many have we got? 872. Thank you very much for the likes. Please smash the like button. Almost 2,000 of you live. And then let's go into a couple more coins. So, okay, I also want to mention Foxy, right? Foxy coming into very, very key support over here, bouncing one of the meme coin bets as well. If you want exposure to linear chain, well, this is really one of the only ways you can get exposure to linear. Remember, you want to buy the chain, you want to buy the DEX, and you want to buy the meme coin or the first meme coin on that chain. So right now, the only opportunity that you have is to buy the meme coin on linear, holding that support. Very, very well respected at this level. I'm sure they have big market makers defending this level because price just doesn't want to break below this. Every time you come down into that 0.0124, price tends to bounce. So looking for a bigger breakout at some stage. This is, of course, been in terms of the chart, your rectangle. So when you do start to break out, you'd be looking at that, right? And move back towards these highs, playing a level to level. That will then become the new range high for Foxy. What else? Okay, Ponky making new all-time highs. Very, very, very strong. Very strong over there on Ponky. How's Turbo doing? Still downtrending. You need to see more. Slurf attempting to break back into the range over here. So that's not looking too bad. Woof, still not looking too strong to me personally. I'm not too keen on Woof yet. Jasmine. Okay, looking good. We outlined this was the area of interest, bottom of the parallel channel. Wait for the break above the range high and break the downsloping channel. You've got that consolidating over here, probably going to lead to higher prices. What else? Okay, let's see. What else? Let's look at the comments. Okay, Boom, the book of memes. Where's Boom? I had it right here. Boom. Am I blind? Where is Boom? I cannot give up. I've committed, guys. I've committed to Boom. Oh, my word. I'm going to type it in. It's probably right in front of me, but these lights are blinding. Boom. Oh, my gosh. Let's try that again. Okay, there it is. The first one. Okay, Boom breaking back into the range. You have to contend with the downsloping trend line. Theoretically, you could view this as either a range or a trend. I mean, you can make the argument for both. It is creating lower lows and lower highs, but usually with the meme coins, they respect the ranges better, which means that this would be a break back into the range. That's considered your deviation. Back test into the bottom of that range, open up the long, and then you need to break above this trend line. Okay, we can look at NEAR. Okay, NEAR is pushing up, but I've mentioned before, I thought it looked like a little bit of a sloppy chart, so I wasn't willing to take any longs over there, but breaking back into the range at $5, any throwback that comes into $5 is the opportune area. Let's also have a look very quickly at the institutional charts and just see what's happening over there. Okay. Okay, well done, Josh. Josh, the navigator, getting full TP on Solana in his section over there on Discord. And then let's have a look at the institutional charts. So you can see positive delta across the board. Of course, the spot bidding is in control. Leverage is following. So we'll pay attention. We'll keep you updated, at least in the Discord on that. I've also given a full write-up over here on the liquidity if you guys do want more information on that. And then we do have all the other traders in the Discord as well. So I think that's it from me, folks. I will see all of you on the next one. I hope you all have an absolutely wonderful day, and cheers for now.